This channel is for educational purposes only. Make sure you do your own due diligence before making any investments. And there is inherent risk in trading, so it's speculative. Just make sure you keep that in mind. Hi, this is Joe. We're going to talk about a trade setup that I did over the course of the last month. I think there's just a lot about this trade that is great teaching tool. I'm going to start from the beginning, go through everything I was looking at, and then I'm also going to go through the whole process of the trade, how it was managed, and how we got out. And it wasn't a monster win, but I think it is the type of thing that adds to the bottom line, because the goal here is to have an equity line that is moving from bottom left to upper right, and have some type of a 45-degree angle that's going to have pullbacks along the way, because you are going to take some losses. But if the drawdowns are small, and you continue to kind of add these crumbs, these small trades, these small wins, this one is actually what I would consider not a single, but a double. I'm constantly on the lookout for singles and doubles when I trade. And every now and again, you get the big win, but that's not really what you're trying to do when you trade. So let's get into this example. The stock is STX, Seagate Technology. And I definitely want to show all four time frames here, because what I've said in the past is that I really I will do a shorter term trade, a trade off of a daily or even an hourly that has really good monthly and weekly conditions in place. And I like doing that because I know I've got the wind at my back when I do a trade. And a lot of times they'll move faster and they'll move stronger and they'll be a more powerful type of a trade. And other times the volatility is just maybe a little bit too much. And, and I don't, risk is a top priority for me. So if volatility is expanding dramatically, I'm probably not going to be in the trade for that long, just based on the way I do things. So, but this is a good example, because if you look at what the monthly looked like to start, you had this sideways pattern, and notice how, these are the types of things that catch my eye. So here's a higher low here in 2017, higher than that low, and then another higher low in early 2019, and then another higher bottom even through the market decline in early 2020, made another higher low there, right? And then you made another higher bottom. That was more of an interim low, but it's good enough. And so what I'm noticing is, even though we're making kind of like double tops here, each bottom keeps making a higher bottom. So that just tells me that there's signs of accumulation. And then if you go down and look at the low ADX pattern, where the blue line is just going sideways and not doing anything for an extended period, that's really attractive. So I know that if I start to see momentum start to kick in, then I should assume that this big pattern may be looking to resolve itself to the upside. So if we go to the weekly chart, that's what we started to see here. Late last year, we started to get a move, pretty strong move to the upside. It actually took out this prior peak here. And then we did get a pullback that bled back through that area. But if you notice what the ADX did, ADX crossed above 25 after being low for several months. MACD both lines crossed back above the zero line, and we got a pinch on the pullback. And then during this pullback, the ADX actually stayed above 25, and so did the green DI. So these are the perfect type of conditions. And, I almost want to just show you, let me just show you this. So this is really the condition that I'm talking about. Strong move to the upside, and then we get a pullback. Good confirmation from MACD, good confirmation from the ADX, and then during the pullback, MACD holds. And if this is a first cross of the zero line, I'm not as troubled if this wants to cross back below the blue line, the signal line, on that first pullback. It's not as troubling to me. When you get farther away from the zero line and you cross down, that bothers me a little bit. But on the first cross, a lot of times you got to let it. Sometimes the pullback will be a little bit deeper, and it will break a little bit. But holding above 25 on the green DI and the ADX is a really strong sign. So we had this in place on the weekly. Now, if I go down to the daily, because remember, I'm trying to get in on this weekly chart right here, this pullback towards the 18-week, but I'm going to do that by getting in on the daily time frame. So I'm going to zoom in on the daily now, and I want to show you. So this is the pullback that we were just talking about on the weekly. And what happened is, again, this is a classic signal from my book, the 2 time frame setup, weekly, daily in this example. And the 18 crosses down below the 40. And when that happens, we're waiting for the first time where price is below both moving averages. So that was right here. And that happened to be when it announced its earnings. So again, if I'm going to trade off of a daily chart or an hourly chart, I'm very suspect about buying on earnings. I don't want to buy. In fact, even if I'm buying longer term, I'm not going to buy in front of earnings. If earnings are coming in the next couple of days, I'm going to let earnings go by. I'm not going to buy in front of that. Now, if the pattern looks so good that I really want to be there, then maybe what you ought to do is think about buying some out of the money calls or something like that so that you can limit your risk. Because the fact of the matter is, these earnings can really come out of nowhere. I mean, I don't know that the analysts truly know what's coming in terms of what's happened is they changed the way they do this. And so Sarbanes-Oxley years ago was passed, and it made it very difficult for the analysts to actually give the company, the investing companies, a lot of information on what earnings are going to look like. And since that time, really has been about 10 years, it's continued to get worse and worse during earnings season. And so I don't like to mess around with that because I'm not convinced that the market is fully aware of what's going on with the company. And I think that's why there's so many surprises and we're seeing so many big moves to the upside and to the downside. So it was legislation that was supposed to help the investor, but I think it's made it much worse. So anyway, I just wanted to bring that up. And that's the reason why I basically avoid buying right in front of earnings. Again, unless I want to do something like a call option where I can limit my risk. So we go back to this trade and let's look at this. So we get this pullback here. We're testing this low. We've got the signal now where 18 is below the 40. Price is below both moving averages. So I'm looking for where price is coming up through the 40. And I love it when it happens on a green bar, like a pretty strong green bar like this was. And it shows price expansion. Now, look at what was taking place. MACD had come down to the zero line and it was just crossing back above the signal line right at the zero level. And we had low ADX through the pullback. We had low ADX, no real sign of sellers, and ADX was very low at the time the signal came. This is basically all the things that I'm looking for when I go and look at a trade, and I'm looking at all the conditions that I think are primo for me. This would kind of meet those criteria. I got the big picture looking interesting. I've got some strength showing on the tradable time frame, the trending time frame, and then I get a pretty good pullback. And then I go to the daily chart. Now, when we did this, we put this trade on. We actually weren't. Entry wasn't perfect. We probably got. I would want to do it as soon as it takes out this peak right here, this green bar right there, or you could wait until it closes above. Well, we saw what was happening during the day, so we got in, but it wasn't perfect. We didn't get right at that level. Let me just see. The high of the day was 64.88. We probably got in around 63.30, something like that, and our stop goes below this low right here. And that low was 58.35. So we risked about 5 points in this trade. And so we put the stop in and we actually put a target in. And because we did this in off the daily chart, and we know there's a lot more volatility on the daily chart. The weekly is different. if I'm going to do a trade on the weekly, I'm probably not going to manage it the same way because I know I'm giving it a lot more room when I trade off the weekly, and I'm willing to give it an opportunity to make a bigger gain. But if I'm trading a stock off of a daily chart, I know there's going to be big kind of swings, intraday swings, and there could be minor gaps and stuff like that. So the way we would play it is, I'm risking 5 points. At 5-point gain, at a 5-point gain, I'm going to take a quarter of a quarter of what I've taken. So, if I've bought 1,000 shares here, I'm going to take a profit in 250 at 1-to-1, meaning whatever I risk in terms of points, which was 5 points. When we were up 5 points, I'm going to take a profit. Now, I am using the stock's own pullback to determine that. So even though it doesn't look like I'm using technical analysis to determine the targets, I'm using the stock's own volatility to determine my targets. So if this pullback, let's just say this is a $50 stock, a $150 stock or a $200 stock, this pullback is going to be a lot bigger. And it's going to allow me for a bigger upside move. So I'm using kind of the stock's own volatility to determine that. I want to make sure you understand that. So at 5 points up, we take a profit and we move the stop to break even. So whatever price you paid, you put the rest of the position at break even. And then, so let's just say we're in at 63 and make the numbers even. At 68, we're taking a quarter of a position. We're taking 250 shares and taking profits and booking it. And then 750 shares are going at a break even. And then at 2-to-1, so if we take 68, add 5, up around 73, we're taking another quarter of a piece off. And what we do with the remaining half is raise the stop to 68. And again, I'm just using round numbers to keep it simple. But so once I get 2-to-1, the balance of the position goes to 1-to-1. And I know I'm doing this really aggressively. And the reason I'm using the stops this way is because I know I'm trading off of a daily chart that gets a lot of movement. I mean, I know this is a pretty big whip around in a short period of time. But the fact of the matter is when you trade off of a daily or if you trade off an hourly, you just have to assume there's going to be a lot of volatility and, gaps and that type of thing. So, you want to play it. I would view, in my opinion, is to play it a little bit more aggressively. Again, if I'm going to do it off of a weekly chart, I'm probably not going to be that aggressive. I'm probably not going to take a profit at 1, 2, 3, every one, maybe 1 and then 3 and then 5 or 6. You give it more room, give it the ability to really trend. But in this case, we ended up getting 2 targets on day 2. And then actually we're stopped out on day 3 when it opened up and kind of came down. We ended up getting, again, we got the first target for the balance of the position. So 68 is what we got for the balance. So in a very short period of time, we had a profitable trade. We basically made, maybe like 1.25 to 1.5 times what we risked on the trade. And we did it in 24 hours. And so I view that as a success. Now, we're not getting rich doing that, but you're adding to the bottom line, as I said, and the goal here is to make the equity line. Your goal is to make that equity line continue to grow each week. And if you can pull that off and have minor setbacks, when you have drawdowns, keep them small. And the only way to do that is to manage your positions the way I'm describing, number one. Number two is to make sure your position sizes aren't crazy. If you put the whole account in every stock that you do, your equity line is going to whip around like crazy because no one makes money on every single trade that they do. No one. So anyway, I hope this was helpful. Hit that subscribe button, give me a like, and we'll talk to you soon.